Hi, I'm Dan Barnes. Welcome to ActivTrades News. Today we'll be talking about some of the macroeconomic events which are impacting foreign exchange trading today. First up is the rate hike. In the US, talk of an interest rate hike has been discussed by economists for the last year. There has been some thought that on the 16th and 17th of September, when the Federal Reserve is meeting, that would be the time for interest rates to go up. However, there have been concerns raised about the collapse in the Chinese equity market and also the state of both the UK and the US economies. At the moment, inflation in the US is at 0.2% and is at 0% in the UK. On the positive side, we're seeing employment fall down to around the 5% mark in both economies. Central bankers in both countries have to make a decision about when rates should go up. The question we're going to be talking about today is whether the time is now. Secondly, today we'll be discussing whether the yuan may be made a reserve currency. Currently, the International Monetary Fund is reviewing the special drawing rights, which is a basket of currencies consisting of the euro, the US dollar, pound sterling and the yen, to see whether other currencies might be included. Apparently, according to reports, China wants in. However, the currency controls that China exerts over the yuan would create some challenges for it to be included as a reserve currency. And even if it were, it certainly wouldn't be on the par with the dollar. The question we're going to be asking today is whether the change is likely, and if so, what impact that might have on the Chinese economy. Our third topic for today will be deflation. There has been discussion of Europe falling into a deflationary spiral. Deflation, of course, is when the cost of assets starts to fall, and it has some positive effects on household spending. It can increase the capacity of households to buy products. However, if consumers start to delay their spending, we can fall into a deflationary spiral whereby reserves of assets build up, and there is, of course, a delay in spending, and also debt becomes harder to repay. Today we'll be looking at whether or not that is the case, or whether in fact a potential increase in household spending might stimulate the economy. And finally today we'll be talking about the oil price. Oil has been generally on a downward trend for some time, with a blip at the start of the year, but unfortunately it's carried on downwards in its trajectory. We will be talking about the causes of that downward trajectory and whether there's the potential for any change in the direction. We will also be looking at the impact that oil has on the rest of the economy. Obviously, as a major energy resource, it has a significant role to play in predicting economic strength. So, David, what would be the impact of a rate rise on the dollar?
Well, it's a bit of a difficult one to judge at the moment because it's a question of what we are expecting and what expectations are built into the market.
Mm-hmm.
There's been a lot of talk that, in fact, despite all the market turmoil we've had in China over the summer, there was a lot of talk that would put the Fed off from hiking rates in September.
Yeah.
We go back to June, the Fed funds futures rate was indicating quite strongly that rates would be they'd be in at 25 basis points or thereabouts.
Mm-hmm.
If we look at that now, it's indicating more like 17 basis points. So, it's a difficult one to judge because, of course, there is real pressure on the Fed at the moment. They've built up expectations to such an extent that they are going to move, that they're going to start hiking. It's just really a question of when. And if they hold off from doing it at this meeting, what does that mean about them? Does that damage their credibility?
Mm. Is there a bit of push and pull between them looking at what's happening in the market and what's happening in the economy and trying to decide which of those two they should be following?
Well, it probably is. And, a lot of analysts out there and other economists would sort of caution the Fed and say, look, they shouldn't be looking at what's going on in the markets. That's not their job. That's not their business.
Yeah.
Let's look at the longer term. Hopefully they're not doing that. Hopefully they are concentrating. I mean, they've got their dual mandate. They've got the price stability and maximum employment. that employment figure now, unemployment's at 5.1%. We just heard that last week.
Yep.
Although the headline payrolls were a bit of a worry. I mean, we dropped below the 200,000 mark.
Yep.
But average hourly wage growth, that's kind of steady. That's not, that's not a concern. So there's a feeling that things are stabilising. But again, jobs is such a major part of what the Fed is looking at, and I guess they must be looking at this labour participation rate, where people are still being disillusioned and dropping out of actually actively looking for jobs, and therefore they're not being counted in that figure, and that is helping to push that unemployment rate down to some extent.
Sure. And what happens to the dollar if they do decide to?
Well, I think that this should be positive for the dollar.
Yeah.
But I think there's an awful lot which we've got to add in behind that, because if the Fed indicate that really is the beginning of a tightening process, and I mean, you could argue that they've already begun the tightening process with the tapering off the bond purchases in October last year. At a time, a few months later, beginning of the year, suddenly the ECB started their own monthly bond purchases. So of course, this has sort of given a sort of an upside lift to the dollar. And so we should see that. We should see the dollar continue to gain ground. But if they suggest that really this isn't a tightening process whereby we can see regular rate increases, so every few months, and also, by what degree? I mean, 0.25%, 25 basis points isn't a big rise, but what happens if we have 25 basis points and then we only say 12.5 basis points or something like this? So it's an awful lot of perception and direction on where's policy heading, and that's what's really going to say whether the dollar rises on the back of the Fed hiking or actually stays flat.
Sure. Okay. Thank you very much. With the yuan becoming a reserve currency, first of all, if it did, what impact do you think that would have on China's reform process?
Well, I think for a start, China's reform, there'd have to be a certain amount of reform before it got there. And I think sort of like the most important things. I mean, it was quite interesting that the IMF was going to make a decision on this in September this month, and then has delayed that until next year.
Yeah.
And in fact, after it made that announcement at the beginning of August, we then saw China devalue the yuan, not by much, and in fact that was welcomed by the IMF as a sort of positive step. But I mean, there's got to be transparency. That's the first thing for the yuan to sort of be part of the special drawing rights, and that looks like it's going to take more time to come about. The other thing, and this is something that sort of some commentators have been talking about, is actually the gold reserves that China holds as a proportion of its FX reserves.
Yeah.
Now, China just updated its gold reserves recently in the summer. And these came out at about 1,660 tonnes, which was much lower than a lot of people were looking for. And it rather spooked the gold market. They thought that China would have been building up bigger reserves. Now, there's a couple of issues about that. First of all, it might only be part of the story, because we have the People's Bank of China, but we have the Chinese Investment Corporation, and we also have SAFE as well. So these three agencies who could all be holding amounts of gold that haven't been reported. So,
okay.
But the important thing about the gold reserves is that, I mean, if you look at the US, its gold reserves are around 74% of its FX reserves.
Yeah.
Germany kind of similar, I think it's about 68%. China's about 2%.
Right.
So there's a feeling that you've got to in order to become part of the SDR, you really need to have those gold holdings raised. So it's a question of, is China there yet?
Sure. So you've got that, and we've also got the currency controls as well.
Well, indeed, yeah. I mean, you've got a currency that is not pegged, but I mean, you have the reference rate, and then you're allowed this sort of small variations around that. Now, that's not a free-floating currency, and the IMF really want to see a yuan rate driven by market forces, not by the Chinese authorities.
Sure. Do you think this is a political discussion, really, or is it an economic argument?
I think it's just. I think they're both entwined, completely and utterly entwined. I don't think you could separate those two aspects out.
Okay.
Especially where China's concerned.
Yes, that's very true. Thank you. Next, we're going to talk about the deflationary spiral. The former Secretary of the Treasury, Larry Summers, said that we're caught in a sort of period of secular stagnation for the near future. And when we talk about stagnation, that's when savings are increasing significantly rather than spending. Do you think that he's right in saying that? Does that describe our situation over the short and near term?
I just don't like the idea of this.
Okay.
It really, I find it rather spooky and a bit weird, because his remedy to this is to spend more, to raise to raise fiscal spending. Paul Krugman came out and sort of made a comment about Larry Summers' speech and said, "Brilliant, I hate you, Larry, because you've put all my arguments and you've done it so much better." And the answer to this stagnation, the answer to this is spending, and it doesn't matter whether this is productive spending or unproductive spending. It doesn't matter. Let's just spend. Now, I personally I'm uncomfortable with that, because I think any spending that happens now is drawing down from future consumption. And if you're drawing down from future consumption, and obviously you're adding to your debt level, and that debt has to be paid off in some respects. Now, Krugman and Summers would say, well, don't worry about that. We've got to sort of deal with the immediate or whatever, and that will out or whatever. I don't see it that way. And the other thing is that I think savings are absolutely vital, because savings are where you get investment, and it's investment, and it's businesses, and it's the ability to create businesses, and it's creating the right environment for that, which I think is important. And I would say that sort of the situation we have been in since 2008 is one where, by cutting rates to such an extent and keeping them low, and we are supporting an awful lot of companies and businesses that really should have gone under, and they are blocking. They're blocking up the whole wealth creation process. So, hey, who am I to argue with Paul Krugman with his Nobel Prize and Professor Larry Summers? But to me, there's something that doesn't sit right.
Yeah, great men do make mistakes. Okay, finally, I think if we come on to oil, it would be useful for us to get a view of what are the causes at the moment behind the downward trajectory in oil, and then perhaps if we could talk a bit about what might impact that, and also what impact is it having on the FX market.
Sure. Well, what we're looking at, we are looking at a situation where there is a glut of supply, where we are oversupplied. There's an awful lot of streams. Think of shale oil in the US that has come on stream. There are Canada, we're now talking about in the immediate now, we're now talking because the sanctions have been lifted in Iran and the situation in Iran, we've got some more supply there. So there are more supplies of oil. We've also got Saudi Arabia, who said that in the past, Saudi Arabia would cut output, raise up, do whatever it did to sort of keep an oil price where it wanted it. Now it's not going to do that anymore. It said it's going to keep its output high to keep its market share. But if we look at where oil has come from, we saw a big rally up in oil, up to $100 and $120, depending where you're looking at Brent or WTI crude. But up at these $100 levels, and an awful lot was predicated on oil trading around $80 to $100, and sort of this is where sort of new drilling came in and everything else. Now, a lot of the reason for that rise, because back then, we're talking about 6-8 years ago, there was talk about peak oil, about how the oil would eventually run out. This is a finite supply, obviously, a fossil fuel, and there was sort of some real talk about oil going to 200 and who knows where. And now we're sort of looking at a situation where, since that time, we've seen oil halve in value since last summer.
Yeah.
And I think a lot of the reason for that is not just the demand. Well, obviously we've also seen falling demand, because we have seen the situation in China where the economy is slowing down. We've seen Europe where everything we're slowing down as well. It's pretty much global.
Yeah.
A lot of commodity markets are also suffering in the same way. We look at copper and everything else.
Yeah.
Now, but we've also, one of the drivers, I think, of the rise in oil and now its fall has been quantitative easing. And quantitative easing pushed all asset prices higher.
Yep.
Since last summer, though, when the Fed indicated that it would be winding down its monthly bond purchases,
Yep.
which it's done and
Mhm.
finished that, and now we're talking about rate hikes. And to some extent, you look at that, and you look at the price of oil, and then look at the euro against the US dollar, and you see the oil price come off. You see commodity prices come off, and it's the precise inverse of the dollar rally.
Yes, yeah. So if we take then quantitative easing and the rate hike and look at other currencies, I mean, over the longer term, as that drops off, what might that mean, given that other equities, etc., other asset classes might also be falling in value too? What could that mean for currencies?
It's a bit of a push and pull thing with the currency markets,
Right.
and you get the feeling that the various sort of major central banks around the world are playing. It's a little bit of a pass the baton, it's pass the parcel, right?
Sure.
Whose turn is it now to sort of get their weaker currency? Because of course, if we go back a few years, that's what everybody wanted.
Yep.
Everyone was talking about exporting themselves out of problems. Build. This is where growth was going to come from. Exports. Well, people can't export. So you can't all export all at the same time. Someone's
Yes.
got to import
Yeah.
stuff.
Yeah.
But of course, what helps through that export is a cheaper currency.
Mm.
So it looks like it's sort of, the central banks are taking it in turn to sort of have their go at a weaker currency, and then someone else takes over. And so, I mean, I kind of just feel that there's going to be this continued push and pull between them. There has been a lot of talk about an outbreak of an outright currency war, and there was a real fear that when China devalued, this was the start of something really major. But that was a 2%, 3% devaluation against the dollar. When you think that sort of since last summer, so over sort of 12, 15 months, the dollar, the euro and the yen have both fallen about 30% against the dollar. So I think it's probably now the time. It's probably time the dollar has, It has gained enough. It's probably the time that we might see the euro and the yen and those other currencies now come and get a bit of a lift behind it. But as I say, it's just because it's past the parcel with the central banks.
Sure. So David, for the week ahead, we have on the 10th of September the Bank of England monetary policy interest rate statement. And this can be quite significant in terms of people taking guidance on what might be happening with the economy. I think if it's more hawkish than expected, that's probably going to be good for the currency, isn't it? What's your view of the importance of it and what it might tell us?
Well, I mean, I think the focus really is on the Fed. We do have some central bank meetings coming up, and that's what we'll be looking at and going from one to the other. But it is still important. The UK, Governor Carney did sort of, he's sort of been on and off and sort of made hawkish, dovish statements and sort of almost sort of been sort of mucking around with the currency levels for quite a while now. So, we had been expecting the Bank of England to move quite early in hiking rates, but that expectation has sort of long gone, and now I guess we're looking for nothing before the first quarter of next year, if then. It still seems like the US will be the first to move. But there have been some sort of interesting sort of dynamics going on at the MPC in terms of there was a shift towards tightening monetary policy by a couple of members, and then that seems to have sort of shifted back again as the data, the economic data for the UK has sort of slightly deteriorated. So we'll keep an eye on that. We're lucky in that now we get the statement and the decision and the vote all out at the same time. Yep. So it's a bit of a triple whammy. So it's something to look forward to, we should pay close attention to it and also watch, because the sterling has fallen quite dramatic. Did fall quite dramatically between July to just July. Certainly over sort of the last couple of weeks, it's fallen quite dramatically and is now undergoing quite a sharp bounce. So it's certainly one to keep an eye on.
Great. Thanks for watching ActivTrades News. We'll be back next week with another economic update. Goodbye.